Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand all the latest cues from the D Street, starting from the benchmark index move to all the sectoral action and the stocks that are buzzing the most in trade. We also have a new listing. We'll be talking about that. What should be your investment strategy after this new stock has entered the fray as well. Also, we'll be talking about some of the earnings, and after that, what should be the strategy on some of those stocks as well. We'll be joined by an expert, but first up, a quick check on how the markets are doing at this point in time. Well, still subdued after the 3-day of losses that we've already seen on the D Street. It's a mixed trend right now, with the Nifty about 20 points down in trade at 18,111. Also, Sensex trading with 17 points of a gain, 61,449. Absolutely flat at this point in time when the benchmark indices are concerned. Let's look at how the broader markets are performing. The mid and the small cap 100 indices, both are trading down. Remember, yesterday also they underperformed the major indices, and even now they are seeing about 0.4% cut for both the mid caps and the small cap 100 indices. In terms of the other sectoral action as well, most of the sectors are actually down in trade, including the Nifty Bank. Also, financial services are down, FMCG is down in trade, metals are losing sheen, 0.7% of a cut for that one. Pharma is down by 0.8%, PSU banks also trading down, private banks, healthcare, all of the sectors, apart from just some gains coming in on the IT pack. That's the index that's been soaring high in an otherwise weaker sentiment kind of a market. Autos and realty, rest of the sectors are actually trading in the negative zone at this point in times. In terms of the nifty movers and the shakers at this point, some of the gainers include Bajaj Finance, Kotak Mahindra Bank, ICICI Bank, also Asian Paints, Bharti Airtel. These are the stocks that are moving up in trade. Infosys, HCL Tech, some of those gainers coming in, as far as Wipro also. The IT names really shining bright in trade as we speak. On the other side, you do see JSW Steel, Hero Moto, Power Grid, Britannia, UPL. These are the stocks that are actually down in trade by 1.5% odd. But time to welcome our guest on the show. Vinit Bolinjkar joins in, Head of Retail Research as far as Ventura Securities is concerned. Welcome, Vinit, and thank you so much for taking the time out for this discussion. Well, first up, your own thoughts as far as the markets are concerned. How are you looking at the trade setup, and what's really keeping you busy in this kind of a market?
So, the markets are gyrating to the uncertainty of the debt negotiations that are going on in the US. However, if you track these changes over the last few years, whenever the debt ceiling has been breached
Yeah.
or you want to breach it, you typically have these nervous 90s, as they call it in the cricketing parlance. So, they have no choice, but they will have to raise the debt ceiling. And in my opinion, that is a given. And after once that debt ceiling is done with, I believe that there will be a lot of money flow happening to the Indian markets.
Okay.
And so one should, rather than preempting the thing, one should get into the market once it is announced. And, maybe you'll be buying higher in the markets, but you'll be buying with a lot of comfort. So that is our strategy going out into playing the momentum stocks.
Mm-hmm.
Having said that, there is significant, you know, juice available in the market in the small cap space. There's a lot of value plus growth, and investors should be focusing on those stocks where you get a lot of value and along with growth.
Got that. We will be speaking about the opportunities in the small cap space, but since you talked about the momentum stocks, that is where you're focused on. I wanted to talk about the new entrant today, Nexus Select Trust. That has got listed in stock exchanges about 3% premium. There was 100 rupees kind of in the upper band of the price, and this is India's first retail assets that are focused REIT sponsored by global investment giant Blackstone. It has already raised 3,200 crores via the public issue right here. What is your own sense about the company? For those investors who had invested in the IPO, they just have about 3%, 4% gains to reap. What would your suggestion be to them and to the new investors who may be looking at this stock as a potential buy for their own portfolios?
So I think it's an excellent asset. It has got phenomenal brands. They've got a very diversified uh, exposure, geographical exposure, and they have a 96% commitment towards the occupancies. Apart from that, they have a very strong 7.5% growth, CAGR growth historical in terms of pricing, and they have got a growth rate in terms of volumes by about 11% CAGR. So I believe that also the Blackstone pedigree is very strong,
Yeah.
and I would expect existing investors to hold on to their stock, play this more as a dividend yield story rather than going in for the short-term capital appreciation. And fresh entrants who would like to get into this story, you should be looking at to buy it around 101, 102 levels.
101, 102 levels would be good opportunities to buy as well. There's a fresh issue proceeds of 1400 crores which will be used to repay the debts of the assets, and also the company has said that they will be looking at acquiring more mall assets going forward from here as well. And since this is the first REIT and the price band is so low, do you believe there are enough opportunities for investors who have an extremely long-term view, say 5-10 years? The stock has in itself to re-rate from the current levels going on from here,
Yes,
looking at the story
definitely
of
there.
India? Okay.
Yes, definitely, definitely. As I pointed out to you, their all their assets are retail. They've
Hmm.
got a good CAGR growth in terms of adding units, as well as the inflationary trend in the rentals yields that we spoke about. So,
Got
given
that.
that the debt repayment that is there on the annual, I
Hmm.
believe that it offers a very, very good investment to hold for the long term.
All right. Okay. The other stock that is in fact trading down in trade today is the shares of Gland Pharma, and this is after Q4 earnings. The stock hit 20% lower circuit, inched lower to 1070 levels as well. The company has reported a 72% year-on-year drop in the net profits to just about 79 odd crore rupees in Q4. There was a production shutdown at one of the facilities in Telangana, plus there's softer demand, and all of these factors have really led to this softer results. The company had posted a net profit of 285 crore rupees in the same quarter of the previous year, and the revenue from operations have also slumped about 29%. Your own thoughts on Gland Pharma? I mean, we had seen this company getting listed just a few years ago, and that time there was a lot of anticipation. We did see the stock perform as well, but off late there have been a lot of challenges. Gland Pharma post poor earnings. What is your own thinking?
So we have always been circumspect with this stock, primarily because of the China factor.
Yeah.
We are very averse to, whether macro calls are going to be, one fine day, the government could impose some kind of restrictions on the company, being from an enemy state of India, right? So
Hmm.
we are not very comfortable buying this stock, and the results were, a howler of a result, very bad results. When your top line shrinks so much, obviously we are going to have a lot of repercussions on the bottom line. So
Hmm.
we've seen the way the kind of results have come out. So I while they have guided that the plant, because of the shutdown, that we have seen the revenues fall off. But normally what happens is a company would definitely plan for the
Hmm.
uh, plan for their shutdown, and they would have upped their inventory levels. But I believe that the inventory levels in the US rationalization that is happening is
Hmm.
leading to their kind of the poor offtake of revenues that is happening. So, given these kind of scenarios, I expect to stay away from the stock.
Okay.
And only when it kind of settles down at certain level, one should look at entering into it based on follow-up commentary from the management.
Understood that. Let's also talk about the small caps and the opportunities which you were talking about as well. We have seen that the broader markets have started to pick up pace in the recent run up in the markets. Your own sense of how should one really approach small caps as a pack? Which are the stocks that one should keep on their radar now?
So, uh, I believe that, if you were to take the sectors that you, thematic plays that you want to take into, I think the infrastructure story is very, very strong. Here we like Capacite Infra. I would have recommended this on your show earlier. I'm not aware of,
Hmm.
but this company has a 5-year order book. Its moat is that it's one of the few players we can do super high-rise structures. They've got
Okay.
18% margins, which are the best in the industry. And its valuations are absolutely abysmal. So we think that once the Q4 numbers are out, this stock would get substantial interest. And, this we think that this stock can become a multi-bagger in the making, because,
Okay.
the number of super high-rise structures that are there in India are very, very a pittance when you compare to city states like Dubai, or you talk of China, Singapore, etc.
Mm-hmm.
So that structural opportunity that is there with very limited players with the kind of execution ability and infrastructure facilities that they have, uh, puts it into a league of its own. uh, a lot of, and they're very very focused on their select markets. They're not going out all India to gain a business, because they already have enough and more on their plate.
Hmm.
Second thing is the fact that they are working only with builders whom they believe that will pay them on time. So
Okay.
keeping these two facts in mind, I believe collections will be positive, which is a very, very essential for these kind of companies.
Mm-hmm.
And their marquee status plus their order book, as I mentioned to you, and the abysmal valuation, I think this can turn out to be a multi-bagger story over the next 24 months.
Got that. What about the IT pack? That is the one that has been shining the brightest in an otherwise weaker market. What do you think about the current move that we've been witnessing? What is that on the back of? Is it only dollar related spike that we are seeing on these IT names, or are things really improving for the companies? Your own sense of how should one approach it?
So, I have advocated earlier on your shows also that we are staying away from the IT pack
Yeah.
because of the risk associated with the US markets.
Hmm.
Our call may be wrong because the pack has kind of outperformed, but I believe that the domestic stories have done far, far better than, deploying your dollars in the IT pack. So we
Correct.
continue with the call. We say that stay away until the dollar situation and the debt ceiling and the other issues around the interest rate cycle are resolved. Until
Okay.
that point in time, we want to stay away. We believe that there are significant headwinds. Uh, the US has been cutting on tech jobs. If you see what IBM has called out for, AI is going to become very, very integral to all business models. And I believe that companies in India could get impacted, especially into the low value jobs where it is easy to automate.
All right, understood that. Well, thank you so much, Vinit, for being with us on the show and discussing with us all these insights about the earnings and the sectors, stocks where opportunities are emerging for investors to really look at this point in time. But the market's still trading mixed. Sensex up by just 13 points and Nifty down by 11 odd points. Very, very weak, lackluster kind of a trade is what you're spotting. Broader market, sectoral indices all weak. It's the IT space that is looking brighter in today's trade. But just like how Vinit pointed out, that there are a lot of headwinds that the sector faces, including the macroeconomic uncertainties, and apart from that, of course, the debt ceiling and challenges abroad as well, and that could be somewhat of an overweight as far as the IT pack is concerned. On the flip side, small caps and the realty pack is where he believes some opportunities could be there for investors to really follow. At this point in time, we'll wrap it up at that, but do stay tuned on to Business Today TV to catch all the updates from the world of business and stock markets. Until then, thanks for tuning in.
Let's talk about the financial journey. I mean, the mistakes that one should avoid, while planning the financial journey, because I think it's important not only to focus on what to do, but also it is important to understand what should one really avoid at this point in time. So, any